Hey everyone, welcome to episode 245 of the Your Money, Your Life podcast. We do this every week live and direct. So make sure wherever you're listening, you like, subscribe, five-star rate, and review the pod. Also share this with your family and friends because we have some good information that we're going to be sharing about financial concepts, personal finance concepts, current business news. So this week we'll actually talk a lot about current business news because there's a lot of interesting stuff going on that I want to discuss. So tune in like you do every week. Let's jump right into it. The first and foremost, um, let's jump into something that's a little bit of a heavy topic. We want to send prayers out to those people that have been affected by the hurricane season right now. There's hurricanes in Florida. There's hurricanes in many parts of the southeast, and so we want to send a heartfelt prayers to these people. There may be um, people that are not being able to be found, losing power, losing their house, their possessions, and in danger. So we definitely want to send prayers. I know that there's people that I know in those areas, so I'm definitely sending a heartfelt prayer out to them as they battle this natural disaster that is plaguing those areas. So for those that are unfamiliar, there's a Hurricane Milton that is leaving more than 3 million people in Florida without power. That's 3 million people without power. That's crazy amount of people. It made landfall. It was a category three, which is, it was actually looked at potentially at one point, it was a category five. It landed at a category three, and it's now being blamed for at least four deaths. And millions more Floridians are being forced to evacuate Florida or parts of the state. There's 18 inches of rain in St. Petersburg, and that's a 1 in 1,000 year rainfall event. That's crazy to think about. 18 inches of rain in St. Petersburg, which is a 1 in 1,000 year rainfall event. There's gas shortages that are being reported, and federal officials have warned about price gouging because people are trying to get out of there, trying to make their way out, and so of course people are taking. There might be people taking advantage of that situation, which is a horrible, horrible thing to do. So again, we're sending prayers to those people because this is a scary, scary event. If you see it here from this, for the YouTube viewers, if you see that chart and just a scary, scary storm making its way through. And we're praying for all those that could be affected. So we did that before we even jumped into our current events of the week and our really our market update, which is something that was important for me to get off my chest first and foremost. But let's jump into a market update. As we sit here today, over the past month, the market's actually had a strong run again. We've seen the moves by the Fed. We've seen different things with inflation, as far as inflation starting to cool, and so the Fed has made those moves to signal that they're moving towards a more dovish policy. So again, the last month up 5% roughly. Year to date, the S&P 500 has done really well. So is the Nasdaq, and the Dow is in the positive territory, up double digits year to date as well. So what's driving the markets today? So inflation came in. So inflation numbers came in. The consumer price index, which is one of the gauges, on a seasonally adjusted basis, it was 0.2% for the month, putting the inflation rate at 2.4%. So on the 2.4% rate, which is getting much closer to our 2% target. The core inflation rate, though, was at 3.3%. The core strips out food and energy. So food and energy, a little bit more volatile. They stripped those out to have a core reading, and it was at 3.3%. So people thought that this reading came in a little bit hotter than they expected. Economists expected to see things a little bit lower, a little bit more moderate, a little bit more slowed down and cool. But this came in a little bit hotter. But let's look at this chart from 2001. Remember, inflation was at its peak at 9% in 2022, and we've come down. So that doesn't mean that the prices have come down. It just means the rate that the price increases are happening is slowing down. So we've already had those baked in high prices because we've hit such high inflation in the past couple of years. So those high prices are still baked in. They're just not compounding and growing as fast now, which is something to note for people that are like, hey, the prices are still high. But yeah, of course, you can't reverse those price increases. They're still going to be high. So much of the inflation increase, more than three quarters, more than the three quarter of the move higher came from the 0.4% jump in food prices. So again, food is being stickier, 0.2% gain in shelter costs, shelter being stickier. The offset is the 1.9% fall in energy prices. So energy has come down a little bit as well, it seems like. So stock futures right now, the market's reacting to this news, and it's getting closer to flattish territory again as we sit here on Thursday morning. So that's the big news in what the market has been driving is that consumer price index, which came out. So the Fed officials have said they're more confident that inflation is going to ease back towards that 2% goal. They're expressing, some concern over the state of the labor market slowing down. And their thing is that they don't want the labor market to slow down too much while they've done all this work on inflation. So those two mandates are something it's a balancing and juggling act. So they're having to move towards working on job and the labor market versus their fight against inflation. So that was huge, huge news. Again, you're seeing initial filings for unemployment benefits. It took an unexpected turn higher at seasonally adjusted 258,000 for the week ended October 5th. That was the highest total since August 5th. So a gain of 33,000 from the previous week. So that's people filing for unemployment. That increase is showing that the labor market is getting a little bit more um, daunting there. So that's something to watch out. Like we've talked about the Fed, we've talked about the movements in the economy. If you think about what drives the market, some of it is market sentiment, some of it is what's going on in the economy. So that's a huge, huge thing to note. Huge, huge thing to note. And let's look at just the Dow Jones fairly much and pretty much look how that's done year to date. Again, over 32%. So again, the market's still having a good year. We're sitting here in the fourth quarter and bearing down on the final stretch of the year. What a crazy year 2024 has been. Has it gone fast? It seems like it has. So that's market update for this week. Now let's look into again, we talked about price cooling in September. Um, that was one of the big items. Let's get back and get this out of the way for us, for my YouTube watchers. So we talked about that price cooling in September. So there isn't much more there, but that was a big, big news. Those numbers just got revealed. So I don't know for those of you that saw, I haven't watched the documentary yet. I do plan to watch it. There was a Who Created Bitcoin. It was a new HBO documentary. It's Money Electric, the Bitcoin Mystery. So of course we know that the mysterious creator of Bitcoin has never been revealed. It's someone that didn't want to be revealed and has done an incredible job of hiding their footprint. I don't know how it's possible to do so. There's got to be a couple of people that know who it is, but I think it breaks the one of the core tenets of cryptocurrency to really reveal who that would be. But I do think there's a couple people out there that know who it is. But the person has never revealed themselves. The cryptocurrency, of course, Bitcoin was introduced in 2008 from a white paper written by an anonymous developer or group of developers. So they don't even know who it was. It was using the pseudonym Satoshi Nakamoto. That person then vanished from the internet in 2011, leaving behind a stash of Bitcoin now worth billions. So over the years, several suspects have emerged, fueling what Wired, the magazine, calls a crypto version of I Am Spartacus. So now this documentary believes it has unmasked the real Satoshi. And they said it's a Canadian software developer, Peter Todd. He came out and said it's not him. Um, but I do want to watch this documentary because again, I'm very intrigued by these sort of things and cryptocurrencies, but it's interesting to know why they think that. I don't know the details, but the documentary seems to try to identify it. It didn't move the market. It didn't really shake or wasn't revolutionary because the person pretty much debunked it later and said that's not me. And it seemed to be that again, no one really knows. It seemed to be they were just poking at grasping at straws and still don't know who it is. But I would like to know why they think that. And so I'm going to watch that documentary when I have a second. Yeah, there's Peter Todd. I don't know. That's not what I expected the creator of Bitcoin to look like. This is what you guys expected. I don't know. Could be, could not be, probably not. But we'll see. We'll see. We're going to watch that documentary to get a better hold on who that could be. Seeing live updates from the market here as well from CNBC. More news. I want to touch on something that's sports related. Of course, New Street, our holding company, is helping many, many families with their wealth planning, their financial advising. Many of those people have spent to be NFL athletes, professional athletes. And so, we started our subsidiary, or another part of New Street, which is New Street Sports, as a certified NFL and NBA agent. We've talked about the landscape for college athletes, with college athletes now being able to use their name, image, and likeness to earn money through college, especially those that have powerful brands. Some college athletes are able to use NIL to earn money from collective or boosters that they transfer schools. And so now there's a new company that's started by Kendrick Perkins, who was the NBA champion, former NBA champion, and he's now ESPN analyst. But what they're going to do is offer upfront cash to athletes in high school and college in exchange for a portion of their name, image, and likeness deals. And this is the arrangement that's kind of interesting, right? It's like an upfront cash. If someone said, "Hey, I'll pay you $20,000 to get future to have 20% of your future salary earnings," would you take that deal? And so this is essentially what the company's done. It's giving you a payday loan, as someone may say, right? For future earnings that you may accumulate down the line. So again, it's not against the law per se. A lot of people look at this predatory, but I do know a lot of people that use these payday loans. They need the cash, right? And so this is it price gouging to charge someone a huge percentage interest rate for these loans? Yeah, it could be in a lot of cases, right? Because these interest rates can be a lot, but this isn't an interest rate thing. It's a future. Well, essentially, the way they framed it, Nilly is the name of the company. Kendrick Persons and a Wall Street veteran have created this company. What they've said, it's more of a licensing deal, right? It's like artist record label licensing deal. Like, we're going to pay you up front to start do your album, do a couple albums, and then we're going to take recoup this money on the back end when you sell your album and go on tours and do XYZ, right? And so that's what they're trying to frame it as, which again does make sense from the standpoint of that's literally what record companies do with artists. Like, artists don't, when they get say they got advance, it's not money they just put in their pocket. It's literally an advance that the record company is going to get paid back when your company. So 50 Cent has famously said he got $1 million advance on his first record label deal, and of course that record label made plenty of money off of 50 Cent because they one gave him the financing to to do his first album, Get Rich or Die Trying, which was a classic album I was listening to the other day while working out because I just needed that extra boost of adrenaline, of course. So if you think about it, do you think that's right? Do you think it's wrong? This is a great article on ESPN about it that talks about it. But we are representing some of the top athletes in the country with New Street Sports, and we are really protecting them and giving them the guidance and understanding of how to approach not only their professional contracts, but their name, image, and likeness, the way to navigate life, their business settings, all those things is stuff in the resources that New Street Sports Agency has provided athletes and is providing athletes because we think of it in a different way. We want to protect our players in all facets. We have the resources, the expertise, myself, to do all these things that have seen so many different things that we are able to guide our clients and our players in the right direction. So, you know, there's so many things out there and so many different sharks trying to look at ways to take things, but we do different things here to protect our players. But I did think it was an interesting article in case those that are interested in sports haven't seen it and want to learn more, check it out on ESPN. Interesting article there that talks a little bit about what that company Nilly is planning to do. All right, folks, let's jump into the question of the week. Remember, if you're watching on YouTube, you're able to see this question of the week. We're going to jump right into it. So the question of the week: what are the three top ways consumers plan to celebrate Halloween? That's easy. Trick or treating, a Halloween party, scary movies. Those are the easy ones, easy ones. And I haven't seen there's so many good movies out right now that me and my wife have not get to check out because she's not letting me watch them yet. Like Speak No Evil. I heard it's great, great ratings, but she's some reason not into it. I want to watch the movie. I think it's great. We have to watch that movie. But three top ways: handing out candy, as trick or treating. I said it. Decorating. I guess I missed that. I'm not a big decorator. Dressing up. Is that a Halloween party dress up? Is the third. Dressing up is the third. Is that a Halloween party dress up? Is that just dressing up? Let's say I got that right and say that that was a Halloween party dress up because that's what we want to do. But if you look at the whole chart, it says hand out candy, decorate, throw an attend a party was the fifth option. Carve a pumpkin. I forgot about that. But that was the fourth option. So those are the biggest plans for people this Halloween. Halloween, I guess, is this month. You almost forget when you're so busy doing different things. We have different things. We have so many workshops from New Street Advisors Group coming up this month. We did a Brooklyn Public Library one last week that was highly attended. We talk about the stock market and how younger people and diverse people can get invested, and people that were thinking about starting their careers. Another one coming up with Freelancers Hub. We have some other ones coming up with some other organizations as well this month. So busy, busy month for New Street Advisors Group and our many, many clientele. Next question. Which generation falls for the most scams, baby boomers or Gen Z? I'm going to say Gen Z. The easy answer would be baby boomers because of the lack of, technology, nuance, understanding, and all those different things. But they're so risk averse, right? When you're older, you just get scared of everything. You don't even want to go out the house. So I think it's Gen Z because they're just being tricked by things online, right? Like they see something online, they think it's real. They see someone tell them they can make $1 billion by doing XYZ, they think it's real. So I'm going to go Gen Z. And the answer is Gen Z. 44% of people aged 20 to 29 report losing money to fraud, compared to 25% of people 70 to 79. I knew it. However, people over 70 reported a higher median loss, which makes sense because they have more money. So that's an easy one for us, New Street. Like that's easy for us, Team New Street. We got that one. Folks, we do this every week and it's quick, shorts to the point, and it gives you tangible advice as well as new and current business news. Make sure you tune in every week because we do this every week. We will see you next time.